Recently, one of my younger brother's friends, I think he's 23, he called me and asked me that, how can he plan his future finances in such a way that he starts building passive income to support his own lifestyle in the future. So it's a question that a lot of people are very excited about when they hear about what a good financial plan can do for you. So then I sat with him and we broke down based on where he is today, where he wants to be. And we realized there are so many gaps before he can come to the passive income aspect. So I thought that in this video, we'll discuss for a lot of y'all who might not have made any financial plan, might not have anybody in the house make a financial plan. These are the first few basic steps that you must deploy, that you need to take action on before you even start worrying about investing and future returns. So let's just jump into it. So let's start with the first step. What are the immediate steps that you can take to start a financial plan? Step number one, check in your house, check with your parents. Do you all have your life insurances in place? Now, life insurance, the way to do it, everybody in the family may not necessarily require, it's on you guys, but who absolutely does require is whoever in your house is the breadwinner, is the who brings the income home, right? So most of the times, okay, let's assume it's your father. Now, your dad may not have set up a life insurance, or his life insurance might be a weak one. So this is what you need to do, right? First of all, you always need to get something called a term insurance. Term insurance is very simple, meaning if you take out a life policy on your dad for, let's say, 5 crores, which means, God forbid, but if anything happens to your dad, the insurance companies will pay all 5 crores to his nominees, to the ones who he decides will get the money in case something happens to him. And for that 5 CR, over a period of 10 years, 20 years, 30 years, you pay the insurance company something known as a premium. So how do you plan this? How do you calculate this, right? First of all, think about it like this. On an average, what is the monthly income that is required to run your house, right? Multiply that number by around 200. So let's make it simple. Let's say that on an average, it takes you 1 lakh rupees to run your house, right? So 1 lakh into 200 is 2 crores. That means your father should have at least a minimum cover. Cover means what the insurance company will pay you, of 2 crores. And why do we do that? Let's say that something happens to him and the family gets 2 CR and there's no other way to earn income. You cannot spend from the 2 CR, but instead what you do is you put those 2 CR in the safest option that you can think of, which, for example, let's take it as the bank FD. Right? A bank FD, if you put 2 CR, they give you a 6% return. That means on 2 CR every year, you will the interest generated will be 12 lakhs, which is coming to 1 lakh a month. So as long as you keep this calculation in place, you will know that in case anything happens with the breadwinner of your house, you will still have some form of income to sustain you. Step number 2 is you need health insurance or medical insurance for your entire family. Now, what does this mean? It's similar to life insurance, where you go to an insurance company and you say that I want health insurance for my family and me. The insurance company will say, okay, how much insurance? So you will say, fine, per member, we want around 50 lakhs worth of cover, which means if we are hospitalized or we have any medical expense, which is up to 50 lakhs in the year, the insurance company will reimburse us. And in return, we pay the insurance company premium again. Now, why do we first of all need this? Because think about it. If something happens to anybody in your house, right, unfortunately, and either they're in pain or are hospitalized or are unwell, the last thing you want to worry about is the financial burden. You're any which ways, the whole family is going to be emotionally aggrieved. You don't need additional pressure of where to get the money from to pay for the hospital bills and so on and so forth, right? One important aspect in health insurance is that you'll have to be a little thorough in reading all the insurances, because different health insurances cover different things, which means before COVID, very few of the health insurances ever covered COVID. So obviously, if you had taken a health insurance 5 years ago and somebody in your family got COVID in the last year and this year, the insurance company would not be covering the COVID hospital bills because it was not part of the insurance. So the insurance policy which you guys are going to get for health, you all should read it. You all should ideally get somebody reliable who can guide you all. There are a lot of aspects. There's something known as a claim rate, which means out of all the insurance companies, let's take Tata. If Tata gets 100 insurance claims, out of 100, how many do they serve? right? It doesn't necessarily, they do not necessarily serve all 100. So there's a percentage that they serve 99 out of 100, which is a good ratio. Some of them, some other company might serve 95 out of 100. So you'll have to look at these aspects. You'll have to look at what all diseases and what all injuries and what all is covered within the policy, so that you know that, okay, fine, if anything within these things happen to anybody in my family, the hospital bills would be reimbursed by the insurance company. This is part 2. And part 3 is what we call a contingency fund, an emergency fund. What you should do is you should keep 6 to 12 months of your total household expense, okay, at a minimum, and store it in a fund. Like you collect a 6 months. So like again, your household expense is 1 lakh a month. You can go between anywhere between 6 to 12 lakhs to be on the safe side. Put the fund aside. Okay, and do not, that fund is not supposed to be invested. That fund is not supposed to be touched except in times of emergencies. So once again, you had that kind of a fund, right? You had a year's worth of expenses saved in a fund, and unfortunately COVID hit, right? So we're going back in time. And when COVID hit, your immediate income would have stopped. Your house's income would have stopped. You know that fine, you have at least time for a year, and that is the time you dig into the contingency fund to survive. Okay, now, if your life insurance, your family's health insurance, and a contingency fund is sorted, what happens is the first things first, you know that if there is any disaster which would lead in turn to a financial disaster, at least you're sorted from that. Because in case the breadwinner of the house, something happens to him or her, you have the life insurance to cover you financially. If anybody is unwell, you don't have to worry about expenses. Majority of it should be covered by the health insurance companies, and you have a contingency fund in times of emergencies. So before you start deciding to invest money, make sure that for your family, these 3 aspects are sorted. And once they are, then we'll get into investing. Now, once these 3 things are taken care of, now any excess income. So let's say you have, first of all, excess income, pay off the premium, create your contingency fund and sort that aspect, because it's more important to have that than to have future income grow when your current livelihood might be financially at risk. Okay. So after you sorted your insurances and your contingency fund, then any excess income you need to start investing in. Then it starts depending on an individual that, okay, how much, what is your income? What is your risk appetite? Do you need money month on month, or are you able to invest directly for a 10 or 20 year horizon, so on and so forth. The end purpose of this video is, when you are financially well planned, right? Step 1 is to take care of your family security, which will be through these insurances and contingency funds. And step 2 will be to grow your income, which will take place through investments. So with that said, if this basic video helped you out, let us know in the comments. If any of you all would like more help with any of the insurances or how to create a contingency fund, let us know, because then we can further create an in-depth video on these aspects. It's good to have some understanding of what you want your income to be. Wait, I have to redo this part again.